What's up, guys? It's Albert. Okay, real talk. I need to ask you something. How many of you have sat at a family dinner and had some uncles, some aunties, some older cousin just go, "Bro, you are still renting? You are literally burning money every single month. Just buy a house already." And everyone at the table nods like, yeah, he's so right. Like it is some ancient law passed down from generation to generation. Rent bad, buy good. Simple, no questions asked. But here's the thing nobody says out loud. That uncle bought his house in like 1989 for $60,000. He has no idea what it costs to buy a home in 2026, because right now the average home in America costs $408,000. Mortgage rates are at about 6.3%, and the average American family earns around $83,700 a year. So before you go call your uncle and tell him you found a house, let us actually look at the real numbers, because today I'm going to answer this question once and for all. Should you rent or should you buy in 2026? And I'm not going to give you some boring, maybe it depends answer. By the end of this video, you will know exactly what the right move is for your situation. Real numbers, real facts, no nonsense. Let's go. But real quick before we start, if you like videos where we actually break things down properly instead of just saying, "Buy property, bro, trust me," hit that like button and subscribe. It's completely free and it helps a ton. Okay, let's get into it. So here's the first thing I want you to know, and this one is going to surprise a lot of people. Right now, in 2026, renting is actually cheaper than buying every month in 27 out of the 50 biggest cities in America. That's from a fresh study by Empower that just dropped this year. And nationally, the average mortgage payment is about 20% higher than the average rent. So this whole idea that renting is always throwing money away, that's just flat out not true in most cities right now. But, and this is really important, that does not mean renting always wins either, because this is not a simple rent good, buy bad situation. The real answer depends on three things: where you live, how long you plan to stay, and what you actually do with your money. Stick with me, because by the end of this video, I'm going to give you a super simple way to figure out which one is right for you personally. But first, let's understand exactly why buying feels so expensive right now. So imagine you're looking at a home for $408,000, which is roughly the average price of a home in America today. You put 20% down, that's $81,600 up front just to get started. By the way, if you don't have $81,600 sitting around, totally normal. Most people don't. But let's say you do. You take out a 30-year loan at 6.3%. Your monthly loan payment comes out to around $2,030. Okay, that sounds like, okay, I can maybe work with that. But here's where people get caught off guard. That $2,030 is not your real monthly bill, not even close. On top of that, you have property taxes. On a $408,000 home, that's roughly $375 extra every single month. Then you've got home insurance. That's around $150 a month. And then, oh boy, there's maintenance and repairs. And listen, this one gets people every single time. Experts say you should set aside 1% of your home's value every year just for fixing things. On a $408,000 home, that's $340 a month just sitting there, waiting for your boiler to die at the worst possible time. And trust me, something will break. It always does. Every single time. So add all of that up, and your real monthly cost of owning that home is not $2,030. It's closer to $2,900 a month. Now let's look at what renting the same type of home in the same city costs. The average rent in America right now is about $1,840 a month. So the renter is paying over $1,000 less every single month than the buyer. That's more than $12,000 a year just staying in the renter's pocket. And here's where the whole renting is throwing money away thing completely falls apart. Because the real question is not rent versus mortgage. The real question is, what does the renter do with that extra $1,000 every month? If they spend it all on food delivery and online shopping at 2 a.m., okay, yeah, they're not building any wealth. We've all been there. But if that renter takes that $1,000 every month and puts it into a simple stock market index fund, which on average grows at about 8% a year, that money turns into roughly $185,000 after 10 years, just from investing the difference. That's real money. That's real wealth, built while renting, while their uncle was shaking his head at every family dinner. Now, look, I know what you're thinking. Okay, Albert, but what about when the house goes up in value? What about equity? What about all that? Great point. And this is where buying gets its real power. And I want to be totally straight with you here. Buying a home absolutely does build serious wealth. The National Association of Realtors says homeowners build on average 43 times more wealth than renters over their lifetime. 43 times. That's a massive difference. But the key is that wealth does not come from home prices magically shooting up every year. Right now, home prices are only growing about 1 to 2% a year, and inflation is running at 3.3%. So in real terms, your home is actually losing a little value right now. The real wealth from buying comes from something called forced savings. Every month when you pay your mortgage, a chunk of that money goes toward actually owning more of your home. It's like a savings account that you literally can't touch no matter what. You can't take it out when your friend's wedding is in Cancun. You can't spend it when your phone breaks. It just sits there quietly growing month after month after month. And after 10, 15, 20 years, that turns into something genuinely life-changing. Plus, here's another thing nobody talks about enough. Your mortgage payment stays the same every month for 30 years if you get a fixed rate loan. But your landlord can raise your rent every year, and they usually do. So 10 years from now, your neighbor who bought is still paying the same $2,030 on their loan, but you, as a renter, might be paying $2,500 or $2,800 a month because rent has gone up every year. That's a big deal over time. Okay, so now here's the part of the video where I give you the actual clear answer, because everything up to now was just setting the table. Here's how you figure out whether you should rent or buy. 3 questions. That's it. 3 questions. Question number 1. Is buying actually cheaper than renting in your city right now? Because this depends a lot on where you live, and the difference between cities is honestly wild. Right now, in cities like Chicago, Detroit, Cleveland, Pittsburgh, Memphis, and Tampa, buying is actually cheaper than renting every month. Like in Chicago, the monthly mortgage is $495 less than the average rent. Read that again. Buying is $495 cheaper per month than renting in Chicago. That's insane. But then in cities like San Francisco, Austin, Seattle, Los Angeles, and Denver, buying costs way more than renting every month. In San Francisco, it literally costs almost double to buy versus rent. Almost double. So if you live in a city where buying is cheaper, that's a massive green light. If you live in a city where renting is cheaper, the math already starts to favor renting, especially short term. So step 1, look up your city. Is it cheaper to buy or to rent there right now? Question number 2. Are you planning to stay for at least 5 years? This is the most important question of the 3, and most people completely skip it. Here's why it matters so much. When you buy a home and then sell it, you have to pay agent fees, closing costs, all kinds of fees. All of that together usually adds up to about 8 to 10% of the home price. On a $408,000 home, that's up to $40,000 just gone in fees. Poof. So even if your home goes up in value, you need enough time to actually get that money back. Studies show that in most markets, you need to stay in the home for at least 5 to 7 years before buying actually beats renting financially. So be honest with yourself. Am I actually staying here for 5 or more years? If yes, buying makes a lot more sense. If you think you might move in 2 or 3 years, renting is almost certainly the smarter call. You'll lose more in fees than you'll ever gain that quickly. Question number 3. Can you actually afford to buy without completely wiping yourself out? Because this one is where a lot of people get into trouble. There's a huge difference between getting approved for a loan and actually being able to afford a home comfortably. To comfortably buy that $408,000 home right now, you need to be earning at least $100,000 a year. The average American family earns $83,700. So a lot of people are already stretched thin just to qualify. But beyond that, the real danger is buying a home and having zero money left over. No emergency savings, no backup fund, nothing. Because life doesn't care that you just bought a house. You might lose your job, your car might break down, you might get a surprise medical bill. And if one bad month can destroy your whole situation, that's not a win, that's a trap disguised as a house. So if buying means you'll be completely broke after, please just keep renting for now. Save your money, build up a proper emergency fund, and buy when the time is actually right for you, not because your uncle guilted you into it at Thanksgiving. Okay, so now let us talk about where home prices are headed, because a lot of people are wondering, should I wait? Are prices going to drop? Here's what the actual experts are saying for the rest of 2026. Redfin says prices will go up about 1%. Zillow says 0.7%. JP Morgan says basically zero growth. And inflation is running at 3.3% right now. So every single forecast basically means home prices are going backward in real terms this year. Meaning if you buy today at full price in most markets, the home might be worth slightly less in real money a year from now. But does that mean a housing crash is coming? No. Most experts, including me, do not think so. Too many homeowners have built up too much value in their homes for prices to fall off a cliff. What is happening is more like the market is just taking a breath. Prices are going flat. People's incomes are slowly catching up. Think of it like a soft reset, not a crash, not a disaster, just the market chilling out for a bit. So should you wait to buy hoping prices will drop a lot? Honestly, no. Nobody can time the market perfectly. If the numbers work for you right now and you're planning to stay long term, do not sit around waiting for the perfect moment that may never come. Okay, let me now bring everything together because I promised you a clear answer at the start and I always keep my word. So here's the final answer. You should buy if all three of these are true. Number one, buying is cheaper than renting in your city, or the difference is not that big. Number two, you are planning to stay in that home for at least 5 years. Number three, you can afford to buy without leaving yourself with zero savings. If all three of those boxes are checked, buy. Seriously. Homeownership over a long time is still one of the best ways regular, everyday people build real, serious wealth. The homeowner 20 years from now who has paid off their mortgage and owns their home outright is sitting in a very, very good position. You should rent if even one of these is true. Number one, buying is way more expensive than renting in your city right now. Number two, you're not sure how long you're staying. Number three, buying would wipe out all your savings and leave you with nothing. If any of those apply, rent. But here's the most important part. Do not just rent and spend everything. Rent, save the difference every single month, put it in a simple index fund and let it grow. Because renting and investing the difference is a completely legit way to build real wealth. It's not the loser move. It's actually a smart, calculated move when the buying numbers do not work yet. The bottom line is this. Renting is not throwing money away if you're smart about what you do with the money you save. And buying is not always the right move just because your family says so. The people who win financially are the ones who actually run their own numbers instead of just doing what they think they're supposed to do. Your uncle's advice was great in 1989. It doesn't automatically apply in 2026. So look at your city. Think honestly about how long you're staying. Check if you can actually afford it without cleaning out your savings. And make the move that actually makes sense for your real life, not the one that sounds good at a family dinner. Alright guys, that's it for today. If this video actually helped you understand this better, please hit that like button and subscribe. It genuinely means a lot. See you in the next one.